السلام عليكم ورحمة الله وبركاته. Think everything's good. We are live. We are live. Okay, let's do a top-down analysis here. Uh, okay, I think everything is clean here. Okay, let us go to the weekly. If you look at the weekly candles, we are printing down. We are printing down. We are going down here. Look, the way the weekly candle has created some sort of resistance here, and I think price will touch there and start pulling back up. So the weekly candles are showing some sort of bearish structure. So let us go to the daily. What do we have on the daily candles? Okay, the daily has dropped very nice here. How many times this price has rejected from this level? You see, this was a very strong level here, but on the daily time frame. So okay, so we have this one is we have a support here. We have a support, another one which price broke and closed below, but this is where price is reacting to. So maybe you can start pushing up, maybe, because how many times did price reject from this level? If you look at it, if we draw this level, what do we have on this level? How many times price reacted from this level? See, price came here, boom, came here, boom, tapped here, then boom, starting pushing up. So let us see the 4-hour candle, what is doing. Okay, if you look at the 4-hour candle, previous 4-hour candle has closed bullish above this resistance. Price created resistance and the candle has closed above it. So I think there's something going on here. Look at the 1 hour. 1 hour candles are also pushing up. We created some sort of a support on the 1 hour, and we have a resistance which is very close to their resistance. We have a resistance which is close to this, which the candles are very close, very close. Let us see the 30-minute. Okay, what do we have? The 30-minute is also pushing up. We have a resistance. We have a support on the 30-minute. We have another support which is how many pips away? We have this. This is 60 pips, which is a tradable range. We have 75 pips above there, and okay, 15-minute. 15-minute time frame is also, we have a support, the same support on the 30-minute here. So where am I looking for my trades today? Maybe buys above here, sells below here. That is what I'm looking for. Sells below this level. We have those two ranges. This is a very big range actually. If we measure, let us measure this range. How many pips? Oh, well, this is how 100 pips, which is too big, too big over range. So we are looking at this resistance. Okay, we have another resistance on the 15-minute, and that's why we are looking for a target here. Maybe if price closes above, then I think it will be nice for us, for price to move up. Yeah, that's what I'm looking at. For the fundamentals, let us see what we have on there. Okay, you have today there's no big news. This is job openings which happens at 5 p.m. in the evening. So what do we have? Tomorrow we have some other newses. Okay, so today this is what we have. So any breaking news we have? Will the US Fed cut rates? Okay. Okay. What do we have? Yeah, this feels like everybody had lower interest rates. President Donald Trump. Let me read this news actually. So what we have on the, let us see the news. What do we have? What do we have here? Okay. Okay. The Federal Reserve is likely to hold interest rates steady at its July meeting, with Trump's tariffs beginning to put upward pressure on inflation. Powell is facing intensifying pressure to cover rates alongside threats to his position from the Trump administration. Markets expect a full percentage point of cuts by the end of 2026. It feels like everybody wants lower interest rates. President Trump, the Treasury Secretary, and even members of the Federal Open Market Committee, but with inflation above target and potentially moving in the wrong direction thanks to tariffs, the economy growing but still solid. Analysts say central bankers still have time to wait. The Federal Reserve is widely expected to hold rates steady for a fifth consecutive meeting. Federal Reserve Chair Jerome Powell's aim at the press conference will be to sound quite boring and balanced. That's partly because we are going to learn quite a lot in the next couple of months, says Simon Dangor, head of fixed income macro strategies at Goldman Sachs Asset Management. By the time they meet again in September, Fed officials will have several more months of inflation and payroll data under their belts. Why the Fed's independence matters to markets, the economy, and your wallet. Inflation data from June showed prices rising in trade-sensitive categories like appeal and appliance, an early sign that Trump's new tariffs are beginning to impact the economy. The big question is whether we'll see more of that, says Josh Hart, senior economist at Vanguard. And even if we do see more of that, it is a one-time increase. While the Fed is widely expected to vote to keep rates unchanged and Powell is expected to avoid creating headlines, there is one potential opening for what passes for drama out of the central bank. Dissenting votes on the decision. Disagreement over the nature of tariff-induced inflation, temporary or not. Many analysts will be watching for a rare departure from consensus. Pressure on Powell to cut rates. The Fed chair has been subject to a barrage of criticism from the White House this year. Since President Trump believes interest rates are too high, that criticism reached a crescendo this month amid news reports suggesting that Trump was close to firing Powell outright. Such a move will likely raise alarm bells and roil financial markets. Trump has since changed his tune, but onslaught has continued. This more pressure than normal for the Fed chair, says Hart. Powell is faced with a delicate balancing act. He has kept interest rates steady since December, despite a chorus of demands from Washington that he lower them. He has reiterated that the Fed's decisions will depend on economic data. So far, indicates an economy expanding at a solid pace, according to the FOMC's June statement. Powell has also emphasized the political independence of the central bank. Threats to that independence could have dire consequences, including upside risks to an inflation outlook that is already subject to upward pressures from tariffs and somewhat elevated inflation expectations, wrote JP Morgan chief US economist Michael Perroli last week. He also cited that the potential for higher long-term interest rates as a lower outlook for economic activity and a worsening fiscal position. FOMC decisions complicating the picture is a vocal contingent with the FOMC that's in favor of an immediate rate cut. The risks to the economy are weighted toward cutting sooner rather than later, Fed Governor Christopher Waller said in prepared remarks last week. If the slowing of economic and employment growth were to accelerate and warrant moving toward a more neutral setting more quickly than waiting until September or even later in the year, you would risk us falling behind the curve. One expects the inflationary boost from tariffs will be short-lived and has said that policy is too far from neutral. Even a solid labor market and data on inflation exclude the effects of tariffs. He says risks to the labor market have increased. Some analysts expect Walla to cast a dissenting vote in the FCC meets next week. That will be a rare departure in recent years. The FOMC has generally been able to reach a consensus on policy decisions. The most recent visit from Governor Michael Bowman in September 2024 was the first by a board member in 2 decades. Regional Fed presidents have cast dissenting votes more frequently. Who will Powell's successor be? Walla is one of several contenders. Okay, labor market in focus. Okay. So what are we expecting for this thing to do? Price, if the rates are cut, what will you expect? September 17th, 2025 meeting. Okay. Let us read this also.
Hello and welcome to Morningstar. Global commodity markets have been under pressure amid the rising trade tensions, U.S. protectionism, and slowing global growth. To shed some light on what to expect from commodity markets in the second half of 2025, today I'm joined by Nitesh Shah, Head of Macroeconomic and Commodity Research at Wisdom Tree. So, Nitesh, this year so far, commodity markets had to face a world of high volatility, geopolitical risk, and of course, the unpredictable US trade policies. Generally speaking, what do you expect from the commodity space in the short and medium term?
Yeah, so in this year of the storm, there's been no shortage of shocks to the commodity markets. Commodity markets have weathered all of these shocks really well. Commodity prices as a broad group are up, particularly precious metals, which have kind of benefited from all that geopolitical and trade policy uncertainties. But then even other metals, like base metals, have actually risen, in part because prices of, say, US traded commodities like COMEX copper or the aluminium that's traded in the US have risen in anticipation or the implementation of those tariffs. Oil markets have also been quite volatile because of geopolitical risks, but there is a little bit of downside pressure. So that's somewhat taken off some of the upside from the broader commodity group. Now, over the next few months, I do think that there'll be a little bit more range trading while we wait for more certainty over the state of tariffs. We should have the reciprocal tariffs known within just over a week, but then the sectoral tariffs, there's more question marks over. We're still waiting for the Section 232 investigation on critical minerals, which should give us a bit more answers over the state of tariffs on a range of other metals, and that could potentially drive the direction of some metal prices, and we could see a repeat of what we saw in the copper and aluminium markets if other metals like tin or nickel do come under tariff pressure.
All right, let's talk about the energy sector. What are your expectations for oil prices over the next 6 to 12 months, especially in light of ongoing OPEC Plus decisions and geopolitical tensions?
Yeah, so to put a bit of context, OPEC have 3 layers of production restraint, and they're rapidly unwinding the final layer of production restraint of that was implemented that amounts to about 2.2 million barrels per day, and they're unwinding it way ahead of schedule. They were supposed to unwind it by September of next year, and they look like they'll be ready to fully unwind it by September of this year. And then to the second layer of restrictions amounting to about 1.65 million barrel per day, I think OPEC will have the earliest opportunity to start discussing the unwind of that in its November meeting, when you got both OPEC and non-OPEC country ministerial meeting. So that could also add more barrels to the market later on this year. But there may be a little sort of air pocket between September and November where there's no new announcement.
Okay, what do we have on the 30-minute? Maybe the 30-minute may start ejecting from this. I think this is maybe if price is close like this, then we create some sort of resistance. Something like this on the 30-minute is very nice actually. This when sometimes we go against the 4-hour candles, you know. So maybe we'll have something like that for the sales, because if you look at the market, we have a downtrend, a very, very strong downtrend. If we look at the 4-hour candles are showing us some sort of strong bearish momentum actually. You see, look at the price. Since last week, price has just been pushing down. It's just been pushing down, pushing down, pushing down, pushing down. So we gotta see something. If we wanna go with the buys, maybe still have some sort of, if this candle closes above this level, if the 30-minute closes above, we still not check this one, because 1, 2, 3 candles pushing up is very risky. So maybe we'll have something like this. Price creates some sort of something like this, closes bearish like this, then we will have a buys above. When the candle is breaking the high, that was, we'll have stop loss below this level. So that's what I'll be looking at. Maybe if you don't do that, maybe price will push up. Price has to push up, close above, something like that, push up, then come back down, create some sort of support. Price starts creating support. Then when price creates support, something like this, let's start pushing up. That's what I'm looking at. That is all. That's all what I look for. Every now and then, every now and again. So maybe we'll have our break even here, we'll close partials, then price will start. So this it looks like this. There's low volume here. Looks like there's low volume. price is just not going up, not going down. Maybe if this one closes, you'll see something like this, but it's risky actually. The next 30-minute can break the high and you see something like that. If this one closes with a weak bearish candle, with a weak bullish candle. So I'm seeing the 15-minute candles are now, the 30-minute is also pushing up. 15 minutes candles, if this one breaks the high of the previous 15-minute, we'll see prices starting pushing up, because you see the way the 15-minute previous 15-minute closed. So what do we have? What are we expecting to see? If this one closes above, we are not taking the buys, because the 30 minutes is still bullish, but you know, there's some probability. There's probability for price to create some sort of, when price goes like this, it starts creating some sort of support, then start pushing up. So I'm always very keen with what I'm doing. So maybe this one, if you take the buy, maybe you get some like 15 pips. If you're looking for 15 pips, it's okay. You can just take, but sometimes you may not get that 15 pips. So I would like something like this to see something like this. Price breaks that high, they go up like that. That is what I'm expecting to see. And for the fundamentals, maybe we don't have any big news now. There's this one, this Fed interest rates. Will the US Fed cut interest rates? So if the interest rates are cut, where will the price of gold go? See, just explain to you. Uh, Lower opportunity cost. Gold doesn't pay interests or dividends. When interest rates are high, holding cash or bonds becomes more attractive because you earn a decent return with low risk. When rates are cut, the return on cash and bonds falls. This makes holding non-yielding assets like gold more attractive. The opportunity cost of holding gold instead of interest bearing assets decreases, increasing demand for gold. You see, when interest rates often lead to depreciation of the currency of the country, cutting rates. Yeah, gold is priced globally in US dollars. A weaker dollar makes gold cheaper for buyers holding other currencies, increasing demand and pushing the dollar price of gold up. See, yeah, that is what they are expecting. So gold will have to start pushing up. Maybe you could have taken an impulse above the current 15-minute. You look for how many pips. Maybe you lower your lot size and you take that. We'll take that 15 pips, 20 pips. It's okay. Since the follower is bullish, previous follower closed bullish, is it a good idea if the follower breaks the high and the 30-minute closes above this level resistance? Start pushing to this level? Maybe. There's probability. The high of the previous 4 hour candle is broken. Price may start pushing up. Yeah. The 30-minute has to close above this level. But I like taking good setups, I doubt this one. If a candle closes like this, the next 15 minutes or 30 minutes closes like that, then I'm good to go. Trust in this support here on the 15 minutes or the 30 minutes. So that support will be very crucial. Very, very, very crucial. Price closed right there, right at this resistance. You see how the price has closed? Yeah, the 1 hour has closed also. The 1 hour candle has also closed, but the 1 hour looks like it has closed above this. I don't know. Maybe prices start pushing up. Continue pushing up. Did the 4 hour break the high? Not yet. See, and that high will be broken. If you wait, you get paid always. You have to wait. You always have to wait. You always have to be patient. Maybe this one will just close inside the range, something like this. Then we'll take the sales. Like that. 30 minutes has to close something like this. That's what you'll see. Not have to see some sort of support above this level. raise our hands and spread in front of you, clouds floating by, the sky so clear and blue, and it's in the orbits and the sun, such perfect harmony. Let's start questioning ourselves. Isn't this proof of love? Single day, keep us close to you until the end of time. When a baby's born, so helpless and weak, and you're watching it growing. Why deny what's in front of your eyes? Yes, hey, if this one places above, look at the way this one has grabbed liquidity. This one, look at the way it has, see, but I'm not rushing. If you look at this 15-minute candle, broke the low. It was not supposed to break this one. 15-minute candle was not supposed to break. So we'll have to wait another 15 minutes, we have to wait for another 15 minutes to close like this. 30 is where I'm looking for the buys, I'm not rushing to it now. Okay, we may miss this one also. If you miss, there's no problem. If we miss, maybe we'll get another better trade later. So if we miss, we are safe with our money. We have not lost anything. You'd see price will go like this, If you see price going like this, you should be very, very, very patient. Always, always. You should not panic. You should not do anything. Price will always do something. Price will always do pullbacks and start continue. There's nothing. Price will do not just drive. You see this one? Oh, create resistance, was some pips here, then started pushing up, then started, you know. So price pushes down, creates something like this, So you have to be always very, very patient. Very, very patient, because whatever is written for you, you'll get it. Gotta be patient always. You have to be patient always. But if you look at the 30-minute candles are expecting each other slow. See the way they are going. See, it's just that I'm fearing this resistance. Volume may push through it. Volume may push through that level. Already a 15-minute candle has closed. We'll give it time. It has closed above this level. If you look at it, you can just take that now. First 1 minute, price starts driving. No. No, 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 no. Big no. Let price go and come down. Break its own low. Then break the high. That's where we'll go with it. Now it's also pushing up. Now, if it breaks its own high, it's risky. Looks risky. That is probability for price to drive up. Can we get 20 pips? Can we get 20 pips if price breaks its own high? Can we get some 20 pips? Can we get 20 pips if price breaks its own high? That's what I'm thinking of, you know? The problem is the 4 hour is still 4 hour didn't break the high of the previous 4 hour still, you know. That's what making that's why it's making this thing to be very hard to go up, you know. With this 10-minute for the 30-minute candle to close. It'll give us 20 pips in this 10 minutes or no? Sheesh. Price is just, I don't know what. It took a buy here, my stop loss was here, hit my stop loss, then it happened. That was my trade.